All right, the clock has just gone. We're going to get started. It's 11 o'clock, so let's get going. So my name is Jessica Kapp. I'm the head of financial crime here at Thistle Initiatives. Today, we've got a super exciting webinar. This is part one of our four-part series. So these are our consumer duty webinar series. So this is the first one, which is talking about the products and services outcome. So we're going to run a Q&A. We've got an excellent panel today. We'll be talking through some of your questions that have already been sent through. So yeah, lots to discuss today in this short session. Let's move to the next slide. All right, so we've got me there on the top left-hand side, but we have got a much better than myself range of panel speakers today. So we've got Matt, Lorraine and Keith, but I will not introduce them. They can introduce themselves. So maybe Matt, head of credit, do you want to do a 10-second intro?
Yeah, absolutely. Thanks, Jess. So as Jess mentioned, I'm Matt. I head up the credit, also work on aspects of mortgages and insurance as well. So we cover as part of a team the much wider area of credit. So you're looking at lenders, brokers, through to credit reference agencies. Also work with debt firms, so financial well-being might be advisors, counsellors, debt collectors perhaps. So really work with a full range of firms across the space, as well as on the mortgages side as well. So brokers, lenders, and then certainly insurance brokers as part of that as well.
That is a lot of client types. Thanks for that. And Lorraine, do you want to introduce yourself, head of payment services? Lorraine, are you there?
Forgive me, I'm on mute. Yes, I'm here. Good morning, everyone, and welcome. My name is Lorraine Moat, and I head up the payment services team here at Thistle Initiatives. In the team, we have the deep expertise in the payment sector, and the team and I support payment services firms, providing strategic guidance and tailored solutions, including FC application support, change of control, variations of permission, and we complete safeguarding and general compliance audits for our clients as well, along with ongoing ad hoc compliance support. But generally, we're just working as a trusted partner with our clients, helping them to navigate, which is very often the complexities of the regulatory landscape.
Yeah, definitely keeps you on your toes for sure. Keith as well, our excellent technical manager. Do you want to introduce yourself, Keith? Keith, are you there? You're here. Great. I think you're on mute though.
How's
Perfect.
that? Okay, sorry about that. Thanks, Jess. I'm Keith Maynard, Compliance and Technical Manager for Thistle Initiatives and its regulated sister company, Resolution Compliance. So I provide technical advice, guidance and support, general overlay for a range of Thistle Initiatives clients, but the specialism is in funds, investment and related areas. Thank you.
The true expert, which is great. So briefly, Thistle Initiatives overall, so we're a specialist governance, risk and compliance consultancy. We've been running for about 10 years now, so we've been doing this a long time. We basically have a load of different compliance consultants that support with FCA authorizations, ongoing advice, the full breadth of financial services, regulatory stuff. So everything that we do in terms of compliance regulation, we make sure that we support. I head up obviously the financial crime team. That's where all the real fun happens. So here we support anything to do with the financial crime framework, but that is not why we're here today. We'll move to the next slide. So this is why we're here today. So here we're going to be talking about the products and services outcome of consumer duty. Matt, 20 seconds at a high level, what is this?
Sure, no problems at all. So the outcome, as it says there, effectively mandates firms, consumers, the outcome effectively mandates that consumers should be sold and receive products and services which have been designed to meet their needs, characteristics and objectives. So I think initially, effectively the responsibility here is for firms to ensure that products and services are either manufactured, so developed, built and structured, or distributed, so rolled out to respective clients through brokerage structures, for example, and that these designs effectively and fundamentally meet the needs of the consumers that they're targeting. So I think that's really what the focus is here. The second part of that is structuring products and services in this way will support in the reduction of poor consumer outcomes, as well as the reduction in consumer complaints. So I think what we're looking for here is to certainly avoid those poor consumer outcomes, but also I think promote really and foster good outcomes for those consumers. So it's a slight change in what the focus was or has been for the last few years, which is fair outcomes as part of the TCF framework, the Treating Customers Fairly framework. I'm sure a number of you guys will be fully aware of that. So we're moving away from fair outcomes to good outcomes, and certainly a hell of a long way away from poor outcomes.
Yeah, fingers crossed. And then on the right hand side of the screen here, we've got this pretty scary quote, actually. Do you want to maybe just give us a flavour as to what this quote is about?
Yeah, sure. I think this is a classic bit of FCA sort of scaremongering in some respects. I feel like there's an element here of really making sure actually that firms really consider quite carefully the consumer duty and the requirements that are set out, and obviously we'll go through each of the 4 outcomes over this webinar course, but you're really ensuring that you reduce the harm for consumers, and if you don't, then I think there will be some quite severe sort of repercussions for those firms. So it's very important to consider this carefully and really consider the implementation of it effectively, certainly before the deadline, which is fast approaching towards the end of next month.
It is indeed. They're going to be acting swiftly and assertively. So let's see with that deadline looming. Okay, so we're going to jump into the actual proper bulk of this session, which is a kind of Q&A session. I think we'll move across to the next slide, and I will cover super quickly some housekeeping. So at the bottom of your screen, you do have a Q&A button. If you have some additional questions, please pop them in there. We will keep an eye on that. And if we don't answer it today, we will probably answer it in one of our 4-part series. So definitely pop your questions in there. Do not put questions into the chat because we won't necessarily be monitoring that, but definitely pop them in the Q&A section. So this session is around 20 minutes, so we'll see how far we get. We've got a few questions to run through, and hopefully we won't necessarily run over. So we'll turn off the slides now, just so that you can see our faces a little bit more as we run through our questions. And the first interesting question kind of sets the scene a little bit. So what needs to be considered in a consumer duty products and services assessment? Maybe Matt, you might be good to answer this one first.
Yeah, sure. I think initially, and it's probably quite important to stress this, is that everything needs to be looked at on a case-by-case basis. Each firm's going to be incredibly different. Even if you're both, for example, if you're both lenders are going to look at different aspects in different markets to focus on. So there's no kind of one sort of one size fits all, one brush approach here. So we need to consider everything on that basis. But if we looked at broadly, what's included within the assessments, I think the first thing we can look at is target market. So really, mentioning the quote above, we're really looking at making sure that the products and services meet the financial needs and objectives of the particular consumer. Obviously, that's incredibly important here. An example from a consumer credit might be, a merchant is offering potentially high-cost short-term credit at the point of checkout, where actually, if we consider that the target market is looking perhaps for a shorter loan term and not quite the same degree of interest or high interest bearing products, it might be more appropriate for them to have a buy now, pay later product, which is attached to that. So it's really considering that target market and the types of products and services that are going to be applied there. I think as well, just considering the ways in which the products and services can cause harm to consumers as well. And obviously that needs to be central tenet and considered throughout the product cycle as well.
Yeah. So we got more. Go for it, Matt.
No. I've got 2 more. So the second one is distribution strategy. So I think as a part of the whole process here, you've got manufacturers and you've got distributors. So it's making sure that the distribution side of things is again meeting those target target markets and the client customer base. And part of all of it is as a review and post-sale analysis. So is it intended, are we meeting the underlying targets needs? Is there any consumer harm? Are we receiving negative feedback from complaints and things like that? So it's a full loop circle of design and then review and post-sale analysis, which reinforces it.
Okay, that's really, really interesting, and something for everyone sort of on this call to take home, those 3 key points to really think about as part of that assessment process. Got it, perfect. And you gave some really good examples there from credit, but perhaps moving across to e-money payment space, Lorraine. So another example, we are a distributor for an e-money provider, for example, a distributor of an e-money provider. What's the scope of their requirements?
Okay, really good question. Something I'm asked quite often when it comes to this particular sector. I think it's really important to note that firms don't need to have a direct relationship with the retail customer to be within the scope of the duty. If your firm can influence the material aspects of the design, target market, or performance of a retail financial services product or service, then you're caught within those rules and you have to comply with the new duty. I think, though, to be fair, the duty, it does actually apply a degree of reasonableness based on the firm's role and position in that distribution chain, of course. So, for example, there would be more obligations under the duty on a firm with direct contact with the customer than one that may be sort of higher up the distribution chain. However, I think it's fair to say that the FCA expects payment services and e-money firms to communicate through that distribution chain in relation to product design, price and value, etc. So as an example, if a firm identifies an issue that's leading to a poor customer outcome, then it's expected to communicate that throughout the chain so that it can then be addressed. So I think I wouldn't consider, because you don't directly have that sort of contact with consumers, I would suggest you don't just expect that you're not caught with the duty. In fact, you could very much be very much in the scope of that, but it really does depend on that level of relationship that you have with the customer.
No, that's really, really interesting. So another thing to take away is that level of interaction with the customer and really thinking about the obligations there, which is important. Yeah. And the FCA is really looking at this model anyway, so it's a very challenging situation for e-money firms.
It is right now, and I think if I could just quickly add that I think for e-money firms right now, I think payment services as a sector hasn't really had much close scrutiny until very recently from the regulator. And I think it's pretty much now that, if there's a little crack at all, then they're going to look at the foundations underneath to see, exactly what's going on. So I think that it's very important that you do consider exactly where you may be caught with the duty and make sure that you are complying.
Absolutely, yes, definitely. So shifting to another industry here, so really looking now on brokerages. So Keith, over to you. How does consumer duty impact brokerages? You're on mute, Keith. We want to hear your expertise.
Okay, I think that's better. Thank you.
Yes.
Okay, the question asked is asked in a slightly vague fashion, and to be able to answer it for today, I've needed to concentrate on the products and services outcome in particular, as that's what we're talking about. And first off, I need to, I think, reiterate what Lorraine says, that it's a question of knowing to what extent the brokerage in question is one that deals directly or indirectly with retail clients. If it's an entity that has professional clients only, and there's no involvement in a distribution chain that somewhere has retail clients further down the links of the chain, then that firm's clearly outside the consumer duty, and it's going to suffice that the firm's board or other governing body simply determines that, records that, and is probably then going to be in a position to move on. If, however, it's a question of having retail clients somewhere in the chain, then the issue really for the brokerage is to know whether it's manufacturing or distributing products or both. It's quite conceivable to me that such a firm could be doing both. It could be creating its own products and then distributing them. And the basic information required is what's conveyed in the FCA's final guidance of July 23, which is implemented in July 23. So I'd commend that piece of explanation and guidance to anybody who's still unsure about the reach of the consumer duty. Broad points, I think, are where the firm is a manufacturer. It's approving products and services. You have to have a formal program of and repeated review of the approval of any products or services that the firm is offering to retail. It's got to identify target market. It's got to consider customers that have characteristics of vulnerability, as the SCA phrases it, i.e. may or could be defined as vulnerable. It's got to ensure that products and services meet the target market, and actually that the firm reviews its own target market to ensure that the needs are met, not a generic or artificially constructed market. It's got to be real customers with real needs. That the firm tests its products and services in an appropriate way. Where it's distribution, then also then what's been said previously,
Perfect.
all of that matters, and you've got a lot of considerations around developing a distribution strategy, ensuring it's targeted towards the target market, and review that in short. There's plenty to.
So there's a lot for brokerage to consider as part of this to make sure they really understand their retail customers, for sure. Staying a little bit then within the same area, so we're going to be looking at brokers versus lenders in this next question. So what are the differences between product and services assessments for brokers versus lenders? We had this question come in because the lender's assessment looks quite the same as the broker assessment. So maybe, Matt, could you give us a bit more info on this?
Yeah, absolutely. I think much the same as what we've discussed and run through already as part of the last three. You're looking at those sort of major points: the target market, the distribution strategy, and the review and post-sales process. But so if we were to look at the difference between specifically on the target market side, you would, I say difference, you'd probably actually expect there to be quite a few similarities. You're effectively going to want to select, as a distributor, select products and services which are going to supplement and complement the services that you might be offering. So that again is very important. Now, what I will caveat that with is saying that you will, as a distributor, for example, probably go into more depth and more detail in terms of your assessment, because you're going to be potentially delivering, let's say, for example, a finance solution to purchase watches. As a simple example, your manufacturer, your lender may well have a very open mandate in terms of what they consider to be a potential customer. But then for the broker, you're really not interested in all these other aspects. As a broker, you want to broker the finance for the sale of watches. So that's where there's a lot of similarities, but there'll be slight differences between the two in terms of the assessment. From a distribution perspective, probably going to, in a similar sort of fashion, make the assessment that the manufacturer's assessment is going to consider or want to have their products distributed by a set number of brokers looking to finance, for example, again, watches. But actually then for the manufacturers, it's very important that they consider then the distributors and actually look at their distribution channels as well. I think part of going on to number 3 quite nicely is the review and post-sales analysis process. And sort of touching on what Lorraine was saying as well. The manufacturers and distributors now need to communicate a lot more closely than we had done previously prior to Consumer Duty. And I think that's where you're going to see differences in the way in which these assessments are established. So manufacturers are going to place onuses on brokers to make sure that they're distributing their products appropriately and it's meeting what they're effectively considering to be their target market. And then likewise, the distributors are really assessing the manufacturers to make sure that the manufacturers are developing the products, or actually they're selecting the products that have been developed as appropriate for their particular underlying customers. So I'd say, whilst there are inherent differences and you'll consider certain aspects separately, there is crossover, but also a lot of challenges between the 2 assessments as well.
Yeah, definitely. I mean, it's a real challenge throughout that whole chain to make sure we're really sort of thinking about it, assessing and evidencing, which leads me on quite nicely to our next question. So this is one that came in for Lorraine. This is really wanting to get a few practical measures here, which will hopefully help a lot of people on the call. So what practical measures, and this came in from an unnamed firm, could their firm, so a firm, consider when implementing and sort of evidencing that implementation, that their products and services meet the needs and preferences of customers? So what practical measures can they consider when starting to evidence that implementation?
Okay, yeah, this really would depend on the specific context and the individual characteristics of the firm, of course. So without having that detail, I can't be any more specific. However, I suppose there are a few general measures, and if we look at that from a payment services firm's perspective, for example, that they could consider when they're implementing the new duty, just to ensure that they can evidence that it's their products or services are in fact meeting the customers' needs and delivering good customer outcomes. So some of the areas we've been discussing with clients, some ways in which our payment services clients, for example, are looking to achieve this. So we could conduct customer research, so that's sort of engaging with your customers just to understand exactly what their needs are, what are their preferences, and do they actually have any pain points? What is it about your products or services that perhaps you could do differently? And some firms are approaching that through surveys, focus groups, or just even user interviews to get that level of insight. I think another area in which they are looking to achieve this is through enhancing transparency. So making sure that as a firm, you've got clear and easily understandable information about your products and services, and of course the associated fees, or any other particular aspects of that product or service that you feel that would be useful for your clients to understand. That would just ensure that the customer has full visibility into that product or service. So, you could achieve that, or at least make that transparency piece a little bit better through use of plain language, maybe visual aids, for example, in terms of how you present that information to make sure that it's in a user-friendly and easy to understand sort of manner. The other thing that some client firms, we've been working with them to do, is to implement certain customer-centric design principles. So, talking about that customer research that I mentioned in the first point, that's just incorporating the customer feedback and usability testing into the design and development process to ensure that your product and your services are intuitive, which I think is really important, user-friendly, and do in fact do something to address any of those customer pain points that you may have uncovered. One other thing that I think might feel a little bit left of field, considering what we're talking about here, but strengthening your data protection and privacy framework. I think looking at your data protection policies and practices and to ensure compliance with the relevant GDPR data protection rules and requirements. And protecting that customer data and maintaining their privacy is going to help instill trust and confidence in your products and services, and make sure that your customers know exactly when you're using their data, exactly what you're using their data for in respect of providing those products and services. So it's one that I think many firms fail to consider when they're looking at this in the round.
No, we touched on loads there. Yeah. Oh, we've got more.
I was just going to say, sorry, that it's just to remember that the specific measures that you're going to put in place will actually vary depending on the firm size, business model, customer base, and it's therefore kind of critical to tailor any measures to align with your firm's unique circumstances, just to ensure you meet not just the customer needs as well, but also those regulatory requirements. Sorry.
Yeah. No, that's absolutely right. Tailoring is absolutely key. So we've mentioned customer surveys, enhancing transparency, incorporating this into the design and development process, and one of Lorraine's personal favourites, GDPR issues that she loves to deal with as well. So lovely to get that in there. But all of this is really talking about building that trust and really thinking about the heart of the consumer duty. And I think that moves on to my next question, which is one for Keith, which we're really looking at things like vulnerable customers as well as part of this. So we had a question, just looking for a bit of clarity on how to identify and then deal with vulnerable customers as well. I mean, Keith, could you give us a bit of a view on this one?
Yes. Again, we're considering this in the context only of products and services for today. It's wider than that, clearly, and I'm sure we'll come on to other aspects of vulnerable customers in subsequent webinars, the 3 subsequent webinars. The FCA has made set great store by firms' treatment of vulnerable customers for a long time. It's been an issue that's been around probably at least a decade, and again is covered in some detail in the final guidance, which I mentioned earlier, and I'd commend to everyone listening. And it's clear, and the words that are used are that, quoting directly, these firms are not expected to review the needs, characteristics, and objectives of individual customers, to track potential vulnerability for each customer, or to monitor the diverse needs of each customer. So that's the first point. The expectation is not that firms assess individual customers' needs. It has to be taken in the round. And as far as this part of our webinar series is concerned, it's a question of design. The FCA stresses that products and services need to be designed in such a way that they take account of all the characteristics that may reside within the target market. And if those people are vulnerable customers, then the products and services have to be suitable for those people, and they have to actively avoid causing harm to people. So this is a complex area. There's no getting away from it. And as everybody I think will know, what a vulnerable customer is quite widely defined, and FCA talks to a large degree about certain types of customer groups and customer sets who may well have the characteristics of vulnerability. It refers to, in particular, to the impoverished, to disabled people, minority ethnic people, and so on. People who have health problems. It's not a question that can be answered in a short time. This needs a thorough project or sub-project of its own within
perhaps firms. The webinar in itself for this one, it seems. It's a really, really, really tricky topic and a long topic that I'm sure we could continue to talk about for a lot of time. But just given, I'm so sorry, Keith, this is a very, very important point, but we are going to have to wrap up the webinar in a second. I think the key thing that Keith's saying here is definitely check out the FCA guidance and make sure that you design that product with your target customer in mind, and if they include vulnerable customers. And perhaps, Keith, we can pick up on vulnerable customers. If anyone else has any follow-up questions, please let us know.
We should, yes.
Yeah, indeed. We've had a load of questions as well coming through that we will be feeding into our additional webinars. But I'm very, very sad to say that I need to wrap this up, unfortunately, this very good discussion. So if we come back to the slides, there's a couple of slides that I've got to whiz through at the end of this session. So we have other sessions coming up. So we've got part 2, price and value, part 3, consumer understanding, part 4, consumer support. So keep the questions coming in and we should cover them in the next sessions. And we'll be sending a link to all of these, to all of our attendees with all of the other session links. Next slide. So addition as well, we will, as well as sending through these links to the other sessions, in our follow-up email, we will have a little bit of an exclusive offer for those that have attended today's webinar. So we will be offering some of our consumer duty documentation at a significantly discounted price. So you can get access to our comprehensive consumer duty implementation plan and a template consumer duty policy. This is usually priced around 2,600 plus VAT, but we've got a bit of a discount at half price for this. So check out your emails following this session. And then we've got, so here we've got a little bit about our team. So if you do want any additional support or a guidance, please do let us know and we can book in a consultation. And then the final thing I've got to say, if we whiz back to the other slide with our lovely faces on it, these faces include all of our email addresses, and you can also check us all out on Thistle's in LinkedIn or our own LinkedIns as well, and we are all available for questions. The webinar is recorded, we'll be sending that out shortly, and that is it from all of us today. So hope you enjoyed the session. Thank you very much. Have a lovely day and a great rest of your week.